The September slide started this week, or as I like to call it, buying season. As a long-term investor, I hold on to my companies for the long term. So when we see a systemic sell-off, I actually add to my positions. I never sell into a market panic. While there can be a lot of catalysts that cause the September slide, what's really happening is institutions and hedge funds that have huge profits start to take those profits so that they don't lose them. The reason this happens in September is it's right before the fourth quarter, so they can lock in all of those gains. This pattern is so consistent that September is the only month of the year that is down on average. On average, September sees stocks pull back 0.6%. This week, there wasn't a whole lot of news that moved the markets, although there were two interesting news stories. First, China banned iPhones from government employees and state-owned organizations. While this isn't a ban on the citizenry from owning iPhones, Apple sold off significantly, as pundits and analysts believe this could be an indication of where China plans to head, both with Apple but other U.S. companies too. On Thursday, the jobless claims number came in better than expected at 216,000 versus the 234,000 that were expected. While this is good news, we are currently in a good news is bad news environment. A tight labor market indicates that the Fed might tighten again, so stocks sold off a bit this week. Next week, we have several catalysts. On Wednesday, the Consumer Price Index, or CPI report, comes out, and this is a key measure of inflation. Now, analysts and pundits already think that the CPI is going to come in hot, but if it comes in even hotter than expected, this was the catalyst that caused the big sell-off between September and October of last year. It could happen again. On Thursday, we get the Producer Price Index, the PPI, and this could be a catalyst as well as to move stocks up or down depending on whether or not inflation is coming in hotter or cooler than expected. Finally, the deadline for the United Auto Workers is Thursday at 11:59 p.m. And right now, it looks like both Ford and GM are going to settle with the union in advance of that deadline. So whereas previously this union could have struck against all three United States auto manufacturers, right now it's pretty much down to Stellantis. If the union had struck against all three companies, it could have been a big catalyst to the downside, but I don't see that happening, although this could be a surprise as well. As you can see over the past week, Bitcoin has been trading very much in a range that established after it sold off from the grayscale news a few weeks ago. However, the parallel channel that we've been using for weeks now is now directly providing resistance to Bitcoin on the upside. Typically, when Bitcoin hits a trend line like this, the next move is a big one, and it could be either to the upside or the downside. Bitcoin tends to move in the direction that will cause the most pain, and since Bitcoin has been positive in the news lately, I think the move is more likely to be bearish than bullish. This week, we've established a new high here at $26,430. In order for Bitcoin to rally, it needs to break through this high, and will likely see resistance up at this trend line around 26,900. On the downside, Bitcoin has to hold the levels of support between 25,150 and $25,325. If it breaks through those levels of support, there is more downside ahead. It could initially find support somewhere in the $24,000 range, but I'm more inclined to think it'll come back and hit this trend line than it hit several weeks ago, which is now at $24,100. Personally, for me, I am a long-term holder of Bitcoin, so if it sold off, that would be an amazing buying opportunity, which is another reason I'm bearish. I just want it to go down so I can add to my sats. Additionally, if you remember that BlackRock analyst from a couple of weeks ago, his downside target is 7,500, and he's bullish for the long term. Again, I don't see 7,500 as a real possibility on the downside. However, if Bitcoin got that low, it would be an amazing buying opportunity. Over in my investments in play portfolio, this week's winner was once again Canopy Growth, which won last week with a huge gain, and then this week gained an additional 69.54%. The entire cannabis sector is seeing huge gains thanks to the reclassification recommendation that came from the HHS to the DEA a couple of weeks ago. However, the whole sector is moving parabolic right now, so I'm not entirely sure if I would actually put any money to work here if I didn't already have positions. Additionally, my two main cannabis holdings are ETFs, not Canopy Growth. When I first got into the space in 2018, there were no ETFs, and I feel like they're a safer place since it's hard to know which one of these companies will succeed. Canopy Growth still hasn't broken the $1 mark and remains down 59.66% year to date. Out of all the plays, it's pretty risky because it has had financial problems. That being said, I'm still holding on to my Canopy Growth, although my cost basis is $3.95, which means I need Canopy to 10x off its lows before I'm even at break even. This week's loser was Skyworks Solutions, which dropped 9.3% 1.38% on the news that Apple's iPhone was being banned in China. Any of the semiconductor manufacturers that contribute to the iPhone saw extreme weakness on the back of that news because the demand for the iPhone could drop if China decides to ban it outright. Over in the speculation in play portfolio, this week's biggest winner was my short on the NASDAQ, but that's not what I consider a real winner. Instead, I'm looking at DraftKings, which rallied 7.53%. The NFL season kicked off last week, and that's DraftKings' bread and butter. And it looks like a lot of people are gambling, and DraftKings isn't having to spend as much to acquire new users. Golden Minerals, which lost last week and is losing again this week, dropping another 18.51% on the back of no news. At this point, I'm just relieved that stocks stopped going down when they hit zero. I don't see Golden Minerals pulling up, and I'm fully prepared to lose my investment in this play. If you want to learn more about long-term investing, in addition to seeing my own personal stock shopping list of where my next buy targets are for all of my positions, check out my website, getirk.com, which is always 100% free. Please hit like and subscribe. It really does help my channel out, and I'll see you in the next video.